too hot or not too hot? That is the question. Every day we debate it. Is the economy overheated?
The house of pain.
Or just regular heated?
House of pleasure.
Was the personal income number a scorcher? Do we really need a $1 trillion infrastructure package when we already have so many job openings? Does it matter that FedEx can't find enough workers? And the president's whispering for higher wages. All of those issues were in play today as the Dow rallied another 237 points. They come easy, don't they? And the S&P gained 0.33%, while the Nasdaq traded sideways, ultimately declining 0.06%. Next week, though, we end the hot versus not debate. Yep, we're going to do a backwards game plan tonight because next Friday at 8:30 a.m. we get the Labor Department's nonfarm payroll report for June. And I got to tell you, I think this will show more people employed and some wage growth. Not enough to crush the market. But whatever the number is, you can expect the inflation hawks will come out of the woodwork. And they'll demand that the Fed do something now and do it now. Do it now. You can always find a Fed president, non-Fed president, Fed this, Fed that. You know, a guy Fed in the title, and they're going to come out and criticize Powell. I am of two minds about this, and they may not be the ones you expect. My first mind says we'll still see these generous unemployment benefits, so it's really hard to get a clear picture of who's really working for work. I mean, who's looking. I mean, that's called ghosting, by the way. I got a lot of ghosts coming to my restaurant. They're ghosting. They're not really wanting the job. I don't know. We need to see the true face of the labor market. And until those benefits go away in September, we're not. My second mind says the money managers who want the Fed to slam the brakes on the economy aren't really worried about inflation or excessive government borrowing. They say they're worried. They might even mean it. But mainly, I think they're just underinvested or short bonds. So they're getting squeezed, and they want the Fed basically to bail them out. Look, I'm a journalist. Sadly, I have no subpoena power. But if I did, I bet we'd find that many of these guys who come on TV and blast the Fed are failing to disclose that they'd make a lot of money if the Fed took their advice. These are largely the same people who wanted the stock market to have a total down week rather than a great up week. Sorry. So they try to gin up a phony sense of surprise every time we get another piece of economic data. Ooh, look how hot that is. Think about it. We've read article after article about how businesses can't find workers. When you've got help wanted signs all over the place, there's nothing shocking about rising wages, is there? Honestly, wouldn't it be shocking if wages didn't spike? That means Friday's non-farm payroll number could still be pivotal because even the coolest number can be spun as too hot, and it will be. You just need 2 or 3 billionaires to come on the air and explain how Fed Chief Jay Powell is hurting working families by allowing inflation to run rampant. If you're rich enough, people take you seriously, even when you talk about how we need to protect workers from higher wages. And I call them oligarchs these days, and that is meant as derision. Anyway, what matters here is that Jay Powell has made his position incredibly clear. While inflation is running hot, he thinks it's transitory. He refuses to raise interest rates until we have less unemployment. So Friday's jobs number would normally be anticlimactic, except that we have so many money managers who want to hype this report up as the end of the world. Not for them. Oh, no, not for them at all. But for the poor downtrodden early wage earner, the hourly wage earner. You know, that's who they care about. You know, they actually say it with a straight face. Really extraordinary in its bogosity.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.